Hey, what's going on, guys? It's Will. Hopefully you're having a good one. So in this video, we're gonna go over Big Bear AI, we're gonna go over CTM, and we're gonna go over some top AI stocks to watch right now. The first stock that we're gonna be looking at here, and hopefully you guys can hear us okay, is gonna be Big Bear. So Big Bear AI has had some recent surges and then a correction today back down to $6.50. So we're gonna take a look at what that correction looks like today. And then also here, we're going to take a look at some of the future of what we could potentially see playing out for Big Bear in the near term. Black Cat says, hi there. What's going on? Biggie, what's going on? How are you guys doing? And I noticed that Big Bear AI has really caught on over the last year. We've seen it surge to as high as about $10 a share in February. We started covering it in October around $1 a share, and we have long-term positions just to disclose with you. So we've seen it holding above this 200-day moving average, and with the greater market recovery since April, it's pushed up to about $8.75 before pulling back down into September to $4.50. That was after their earnings, and then recently shot back up to as high as $8.50 before pulling back down. Hey Jeff, what's going on? Frederick, what's going on? And Gary, good to see you guys. Hopefully you guys are having a good Friday today. So the next level we're looking at here with Big Bear, clearly it's pulled back. And I think we had some drawings mapped out here for Big Bear. So looks like we were in a very consistent uptrend. Okay, it was making higher highs and using the previous resistance as a support throughout most of September. Then we saw them start to recover and continue some of the direction up here into about $7.50, continuing up into $8.50. And then we see them pull back down into about $7.30. And I just have to make a quick note here. One of our APIs went out over on the machine today, over on Mercatus for Gemini. And so I was going to meet with our dev today real quick to make sure we get things squared away over there. And he just said that he's available, and now I'm available. Or now I'm not available because I just started the stream, but we're going to finish the analysis. We'll make it straight up and clear. Richard says, please open the link for me to search in YouTube. Which link are you referring to, Richard? Frederick says, watch your channel almost every day. Very informative and enlightening. Thanks. That's the goal, to be informative and enlightening. Thank you. Jeffrey says, what do you think in terms of Big Bear AI long-term horizon? Jeffrey, we'll go over it here. Marco, 1 year over $15 is Marco's prediction. So we saw it recently pull back to this support. I'm just sending a message there at $6.70. So $6.50. That's actually a very strong resistance. We've seen it bounce before back here around $6.50, where it's found support before, and we do see it pull back, break that uptrend, Big Bear. And then as you can see, when we're in a bull trend, oftentimes the trend will hold above this moving average, this blue line, when we are bullish. Now we just did cross over after that high to $8.50, and now you can see Big Bear holding below this EMA. So now getting rejected, selling back down, touching down at the 200-day moving average down here around $6.50, and then potentially finding a support here at this previous support. So from here, couple levels to watch. Now, we could see it get rejected and push below the EMA further, breaking down into further support levels, which the next one is at $6. That's quite possible in this trend that's starting here. The other possibility is we see greater market direction look good, which today it did not, except for maybe LTBR. I think they actually reported earnings today. Was that today, Friday? Oh no, that was maybe yesterday, or that was Lightpath actually. But for the most part, the market was down. CTM went up a little bit after hours. which was good, which we'll get into. But again, this is the support level for Big Bear, $6.50. So an ideal world is that this pullback is one step in a greater uptrend, okay, for those that are bullish. What's happening right now is the stock has a greater chance of continuing in the direction it's going, then reversing. So at this point, it looks like it's selling down. Next level of support, 650, maybe even down to $6 a share. We could see that if greater market direction stays red. Now, if we see the market start to pick up a little bit, this pullback was just temporary, and we're going to see the market continue up, then Big Bear's next level of resistance is going to be at about $7.25. So again, while they're up about 500% year over year right now, they could continue selling down to that $6 range. But in the event the market has some good momentum, the next level of resistance would be all the way up here into about $7.25. And then, of course, looking to get back up into those highs of $8.50, which would be a 27% increase. But right now, no validation really that it's not going to just continue selling past $6.50. And so we'll have market direction more clear, at least for this stock, on Monday. So we'll see how it reacts. If we see it really validate that $6.50 range and then continue to make this bounce, great. Maybe we can make a 5 to 10% potential trade there in this swing right here. But if we see it break below at market open, okay, we might want to wait a second, wait for it to cool off. We don't want to catch a falling knife. See, maybe it drops down to $6 before recovering Big Bear. So those are kind of the technicals, right? So $6.50 level is support and resistance at $7.25. Now, the other thing we had was from, let's see, Jeffrey said, what do you think in terms of the 1 year? So I think Big Bear is positioning themselves well for the 1 year. And while they're up pretty big in the last year, you could see this direction as they continue to just build this market cap here up into $7 a share, basically. They have the AI advantage in that they're approaching defense in the AI markets. So not just defense in general, but really jumping in to Department of Defense contracts, TSA, Homeland Security. They're working at the airports. And not to mention, even though their revenue hasn't looked good, and I see the comments, you guys are awesome. Thanks so much for tuning in. You got Kevin is here. What's going on, Kevin? How was the week? James, what's going on? Frederick, they're very disappointed at BBAI losing, but winning on Palantir. Yeah, to lose on Big Bear, man, I mean, to lose on Big Bear, you got to be maybe buying on emotions a little bit when it gets up here, like the shorter term trades. And I mean that totally with respect. Like if you're losing on Big Bear and you really feel like nervous and you're losing, then that's probably because there's a lot of emotions and you might have bought at the top. Now, if you're in it and you might be down a little bit and it's long term, you can have a plan. It's probably not bothering you so much. But a lot of times, I mean, it's at a high right now. Most investors probably, for the most part, have a lot lower entries given that this volatility we see up here hasn't really been sustained for very long periods of time. So this pullback here, very healthy, very normal, and we'll just have to watch again that $6.50 range, see how it holds here throughout the rest of the week as it has pulled back down. I'd love to see it hold, but again, direction right now looking a little bit like a correction, and it is a previous resistance and support, so it might bounce that 650 and continue up. We'll just see. But again, like when it comes to outside of the technicals and we're looking at things like the 1 year target, we could open up OpenAI. I was doing some analysis this morning in our live session, and as you guys know, we trade there every morning at market open. This morning, I think maybe our portfolio ended up a little bit green today, just barely, but we had a trade on Big Bear this morning, actually, where we bought the dip this morning at, I want to say it was like right at market open. So it must have been about 15 minutes after the market opened. We bought down here, okay? And then we were up and things were looking good. We set a stop loss actually, and I can look at where we set our stop loss. Where was our stop loss at? $20.83. So we ended up selling, oh, that was on BAIG. So we were trading the 2x of Big Bear. And we just lost about 1% on that trade. But that's why it's so important to like cut losses and like, at least on short-term trades. Big Bear, we have long-term positions, but on short-term trades, like cutting losses is like the best thing that you can do, because again, market corrections, things like that, if we would have held it, we would have seen, it continue down another 6% or something. And so that's why it's really important if you're in a short-term trade, have the plan mapped out. And how we do that, one thing we'll do is we'll use the machine, and let's see what that 1 year projection looks like. So again, you can kind of see projection on Big Bear here, -3% over the next day. So we were getting all the signals that were indicating red. Next week was negative. Next month it was looking negative. And you can see that OpenAI was coming in with some negative projections, right? Now, it depends on the model, because I would love for Gemini to be up, and I got to talk with Ryan here as we're going to have a meeting on this, because the other thing we were seeing was red over the next few days, and then into the next year was looking green. Now on OpenAI, it's been a little more bearish right now, because it's most likely heavily weighting their financials. So their financials, this is the part that we talk about why most people don't cover Big Bear and why we are covering it while most people aren't. And it's a little different than most stocks we cover, which are like usually very, very solid on the financials, which are their revenue's been down. And it's not really justifying their current valuation of $2.5 billion. However, when you look at their balance sheet, $600 million right now in runway means they're positioned to keep going for the next few years, most likely. Like they have $600 million in assets, they're doing okay. Their liabilities are well managed, 332. Cash is up 400% year over year, or 440%. They have runway, right? So when we're looking at the next year, most things would point fairly bearish. But when you look at where they're positioning with the Veriscan tech, where they're positioning with the ARCA's modeling and projecting inside of the Panama Canal right now, the integrity of the market says that we're going to see more investments in defense. So right now, defense and the big beautiful bill and all those things, we're going to see more investments most likely. So when they're talking about getting ready for the 2026 FIFA World Cup and the 2028 Olympics, those are all things when immigration and border transformations are key. You need to have that locked down and be able to have all of the information on who's coming in and out of the US. And so that's why the next year projection, I believe, will be bullish for Big Bear for those reasons. Now, I would imagine personally that the number one catalyst that Big Bear has is kind of what we were talking about last year, which was they're going to need to come in with either more revenue or no to little negative net income. So new revenue, meaning they get up into 50 million or more in their revenue, which they have had some recent deals. We saw them just deploy at more airports with their Veriscan. They just announced some Panama stuff and then also maritime domain awareness with the US Navy. And they deployed their Veriscan there at Nashville. That would make sense that they come in with a little more revenue, I would think. But we'll have to see. But again, monitoring revenue, monitoring the net income over this next quarter is going to be key. So we'll see how they come in with the revenue. Now, the other thing we're watching is the conversation on like Grok right now. And I think there's a helicopter flying over my house. Jeez, that was loud. When we're looking at Grok in some of the analysis for Big Bear, and then we'll look at this and then go to CTM. But one thing that we're doing right now is we're getting some analysis from Grok, and it's looking at Twitter, or it's looking at all of the databases that Grok works with. And so we're going to really kind of get an idea too of some of the conversation on Big Bear and see what Grok has to project here. In this reference, it's looking at the press releases, it's looking at the financials, it's looking at the news and all those things. So as you can see, technicals are looking fairly bearish. You can see it's projecting down here, and it's saying that $6.50 support is key. You can even see that it's talking about that level. But here's where it gets interesting. It might be negative over the next day. According to Grok, like 2% down. We're looking at, again, projections negative, probably even seeing it sell down further than that $6.50 range. But look, we get a month out, and look, we're starting to see more of that bullish momentum kick in. Okay, we get 3 months out. Okay, maybe it's looking a little more bearish again. But what's interesting is if you go 6 months out, oh, it's looking that it's stabilizing up here around 10% greater than where it's at currently at around $7.40. So what are they looking at that projects Big Bear? What is projecting Big Bear to go down right now, but be up 6 months from now? It's most likely going to be, again, waiting for more financials to hit. And the technical side of things, they've been overbought recently, and we see them start to pull down. And for them to pull down to the RSI or the MACD to where they look like a buy again would probably be down near that $6 price point. So that's why we're seeing some corrections before more green, like everything that's happening in the market, right? How many of you guys were kind of expecting a pullback in the market today? Anyone? Like, it's been printing money for everyone the last 2 weeks. Now let's see if we can determine direction and position for some good buys into the next few weeks as well. You know, let's how many of you guys are feeling that way too? So maybe you're not feeling that way. Either way, we're here to give you the insights. So we're going to watch Big Bear. I think there's a lot of things that are materializing that should show up on their balance sheet here and see that revenue increase. And then let's talk a little bit about, not Big Bear, but let's talk a little bit about this stock CTM. CTM is a company that specializes in cybersecurity, okay? And they work in the tech and AI, agentic AI, but primarily cybersecurity and software for the US government. And they're an interesting play right now because they've had some contracts that put them into the $100 million deal realm. And not only that, they're still only at $106 million market cap. So you got to have caution right now. There's not any hype articles. I will say you won't see any hype articles on this stock because no one's really talking about it. And I see the comments, people say, yeah, we're expecting that. And there's also another comment there that says, we can't tell you what BBAI does with their Navy. It's top secret. I think that's true. There was an article in StockMate, I think, today where someone was talking about, CTM. It was David. And apparently, this is actually CTM stock we're talking about here. And this is from Reddit, but this was a verified, this came from some news actually that came out that I think somebody pulled from a GPT or something, that they were qualified for a $249 million CIMAC contract with the US Navy. Doesn't mean they're going to get it, but CTM has been doing things to position themselves for larger contracts. So right now, CTM doesn't have this contract, but that they are one of the only who have the qualifications to sit at the table here because of their subsidiary, GTMR. So they might get a big contract, CTM. Why is that? Well, here's what they've been doing. If you really take a look back at what they did, I think it was even 2024 here, is they signed this Oasis Plus unrestricted IDIQ contract. What that did for them was that meant that now they were doing on-demand servicing for the government, right? Okay, so that put them in a position to now get more contracts from the US government. And Shortly after that, we were watching this really closely back in 2024, actually. Shortly after that, they came in with an announcement that, and it took me back from 2024, so I got to click it again and see if it's like a error on their page. There we go. Shortly after that, they came in with an SBA. It's like a small business slash shadowing thing where they started learning from, there it is, the SBA proteges successfully onboarded. So then they started learning how to do get contracts from other companies via Seaport, and there was a mentor protege program that they went through for taking on military contracts from the Navy and things like that related to cybersecurity, software development, AI, United States Department of Navy contracting needs, all those things that they would need related to those things. So then they're shadowing companies and learning how to do the contracts, I guess, at that point. And they've been around a few years as well. It's not like they're a new company at that point. But then shortly after that SBA, they signed a $3 million contract. Then they signed a $100 million contract with the U.S. Navy Air Systems. And then they raised some money. So now, okay, this is a company that has a $100 million market cap. They go out, and at the time, I think when we were covering them, maybe they were 80 million or something like that. We'd have to look at where they were at that time. I think it was around here, February. They were at $65 million market cap. They signed a $100 million contract. Then after that, then they go ahead, raise some money, lower their debts, and then jump into some agentic AI. And now there's some talk of them getting some pieces of new Navy contracts. So it's not a for sure thing, right? It's of course there's risk. They're a small market cap, but there's three things that you should consider about this company. The first is that they're in a market of defense. That's a really good market to be in. And I see new scale. You want to see that? Kevin says we've been feeling it, but all the indices were green at end of day. That's right. Donna says, is the government shutdown a threat factors to the market? Of course, Donna, definitely. It could be. It could be. We'll have to see how things play out there. Will, can you talk about GRR when you get a chance? You covered this stock before. We could take a look there because I know they do smart cities, but they've also been manipulated quite a bit. So we'll maybe take a look. Kevin Ackerman says, while lots of our interest stocks pulled back, today was in fact a green day across all SPY and Dow Jones Industrial Average. Yeah, that's good. It's true. So, and CTM was up actually after hours here. Now, there's three things with CTM. The first was the defense contracts, that there's more of them. The second was their income statements and their financials here, which is their revenue has been increasing to year-over-year increases. You see that revenue going up. Then you see the revenue quarterly reach 14 million last quarter with almost a positive net income there. 14 million in the last quarter. Revenue's up 21% year-over-year. Net income is up 82% year-over-year. And their balance sheet, they reduced their debt down below 15 million. So now it's at 11 million in debt. And their total assets surged to all-time highs at 43.5 million. So cash is up 500%. They're definitely planning for something. And there was one other article they did that I missed. This was before the third thing here. They also announced that they went through this program that is called CMMI, Level 3 Appraisal. And what this allowed them to do, this is the subsidiary we're talking about in that article that was released on Stockmate. Went to a Reddit article here, but it was from a legit source, which we verified. But it says that it was through their subsidiary GTMR in CTM that has the potential to take these task orders for this $249 million contract here with the U.S. Navy. So their subsidiary has that ability. So then when we look at the news that came out in March, I think they were already preparing for this, because what happened was Castellum GTMR, which is that company, reached level 3 appraisal. What is level 3 appraisal? An appraisal at maturity level 3 indicates the organization is performing at defined level, which means that they're essentially able to take on higher levels of operations and be able to scale. So advanced network technology solutions, all those things, it's an outcome-based performance model that basically says they have operations that would allow them to achieve business goals. And I know that sounds like a bunch of corporate talk, but basically it means they've done things like SOPs or standard operating procedures that has been verified that this company would be able to take on a larger workforce easier than other companies, which means if they were given a larger contract, they would be able to most likely fulfill it. Interesting, right? And then the third piece here is just the consistent market uptrend with CTM. We see them start to build market cap over the last year up into here $100 million market cap. And we're going to see if they can continue the trend. Right now, we are looking for this move, potentially this $1.15 support level. If they hold it, next bullish target is 130. The bearish target for CTM would be a sell down into about $1 a share if they can't hold that 115 that they're at right now, which they are holding. But again, where they've notoriously liked to bounce through are these levels here. And we can see them really start to consolidate here from left to right after their greater kind of uptrend they've had over the last year. So the last thing that I forgot to mention as well about CTM, I didn't really forget, but we had it written down here, which is, did you guys know that the institutional holdings on CTM is actually only, that's not the right stock, CTM, and this isn't in any way meant to like make you want to buy CTM or anything like that, but I'm just telling you, like, we just looked at BigBear.AI, it was 33% institutional holdings. And then here we could see the institutional holdings on CTM is not 33%. It's just 7.5%, 7.49%. So in other words, there was a comment somewhere where someone said, I'm only holding 34,000 less shares than BlackRock, someone said. Because the joke is there's barely any institutional holding right now. You know, so that's something that's happening. Cool. Cool. Awesome. So that's what's going on with this setup. DC Smith says Jay been selling shares. Is that insider activity that's going on? Right, Jay, officer, is selling shares. Shares traded 50,000, 50,000, 70,000. There's been some sells over the last month or two, but realistically, 50,000 shares. I mean, we're talking about they're holding 7 million. 50,000 shares. I mean, what is that? Like, it's like $30,000 or something. It's really not that much. I know it might look like it's a lot. It's really not that much. So I wouldn't worry about that insider trading that's going on, sells. If you look at some of the buys, let's take a look at what it looks like over the last, it's not even working on NASDAQ. It's not letting me like go from thing to thing. Might even have to go into our own app, pull up the SEC filings, and maybe we can get an idea through here. We're still working on our SEC. It's one of the sources that's considered by the AIs, and that's Big Bear, so we'll have to go into it. But anyway, CTM resistance at $1.30 bullish. Support right now is at $1.15. If it can't hold, next support at $1.05. Yeah, like he could have had to pay his kids college. Yeah, that's a good one. I mean, we're not talking about anything that would really move the stock too much. I mean, those orders started happening on beginning of September, September 3rd, September 4th, September 9th. It's up since then. So I wouldn't really worry about that insider sell that was happening with CTM. So is there any other ticker symbols? There's some good ones. James Neal says Kratos. Is that Kratos? Kratos. Kratos Defense and Security. Yeah, it is. So this is a defense company. It's really been on a good uptrend recently. We've seen Kratos really continue this uptrend. I haven't covered it a lot because most of the time we're pretty caught up in a lot of the other defense companies. But let's take a look at Kratos over here. Market cap is 14.5 billion. So they're up there already. They've had some billion-dollar wins recently, and their revenue's at $350 million per quarter. So, they're making the money right now. You can see that revenue coming in, positive net income, increasing year over year, up to $1 billion a year. Balance sheet up to $2 billion. They're still actually looking a little bit overbought at the moment. I mean, we could take a look at the PE ratio. Wow, it's saying 934 there. It's just actually overbought. If you look at the RSI, we can look at, the MACD here. Just have a look. You see how it's way up there in the overbought territory. There is a possibility, of course, it could continue up, like always. That is a possibility. But more oftentimes than not, when you see a stock this overbought, you're going to see some corrections take place. So personally, I wouldn't get into it right now, but I do know they're doing some defense tech that has been pretty innovative. They're working on hypersonic systems, including this rapid, survivable, and affordable strike and test capabilities on national defense. So propulsion power, unmanned systems, we're talking about military grade weapons defense, all these things. They're working with the Pentagon. And so, there is a lot of demand for U.S. defense right now, and there's a lot more investment in U.S. defense. But nevertheless, just from a valuation standpoint, they're looking a little overbought their CTOS right now. SentinelOne, David says, personally, SentinelOne, I wouldn't be too bullish on, David. In my experience, while they've had, I'm typing David here. I meant to type SentinelOne. SentinelOne, if I'm not mistaken, they've had some declining revenues. SentinelOne. They have shifted to more AI-powered cybersecurity. I know they work with like CompTIA and Salesforce. What was the ticker symbol for them? SentinelOne is just S. And as you can see on their stock, $6 billion market cap. They're up there right now. They're still a negative net income every quarter, and they lose money pretty consistently. They've seen, I guess, year over year revenue increases. Quarterly, they have slightly increased, and you do see revenues up at 20% a year. They're actually on track to double pretty soon. But let's see, total assets in equity, they're holding about 1.5 billion. Okay, and bringing in 240 million a quarter. With the $6 billion market cap, it's not too bad. I could see why you would be bullish on the company given their market cap currently, and where it seems like they're going is bringing in about $1 billion a year with about 2.5 in assets would mean their fair value is probably really around 3 to 4 billion. If we pull up their stock right now, let's see, they've had some manipulation in the past, but you do see them kind of find a support here. If you're looking at a trade, I don't know if it's short term, it depends, long term, short term, but SentinelOne, you're probably seeing some levels like this, looking for some sort of bounce here. and potentially finding a better deal at this time. It would be more of a swing trade if you're looking on this time frame for something like this, about a 20 to 50% potential swing up into that $30 range. I could see where you're looking at it. It seems interesting. But personally, I just haven't seen as much of the real world value from the software. So I know that they're business to business in their dealings, which is good, but I just haven't seen it personally. And I've seen manipulation on the stock as well in the past, so I don't really touch it much. But all power to you. If you want to use it or invest in it, by all means, all power to you, man. So Mel D, can you please have a look at Richtech Robotics? Yeah, so Richtech Robotics is an interesting play. It's fairly speculative as they don't have revenues rolling in just yet. Let's see if we can add them here. Richtech Robotics was up 5.8% today. They pulled back down to this support level or previous support will act as a resistance here. They have been rejected before at these levels. So this time, as they're getting rejected, watch out. They're selling down right now. So as you can see, we see a break up after a sell down to 392 today. They've been getting some downward momentum over the last week, selling down. They have a support level there at about $3.75 here. So if they are able to hold it, maybe they can continue that uptrend that they're in and make that run. But when we look at the financials, to me, it doesn't make sense why they would make that run. I've found that just from looking at most valuations, you can find that their revenue is at only $1 million per quarter. That means they're bringing in like 300K maybe a month or something like that. It's minimal. And then total assets, $100 million in assets, but their market cap right now is at $675 million. I think there's a lot more hype, a lot of hype here. And personally, I know that it's robotics and it's like a cool market, and they might continue to go up just because of that and their small market cap and that, but their market cap still way exceeds their current financials. Like, it's actually like really ridiculous, their market cap, for the money they're losing and where they're at currently. But again, robotics is probably the third wave of AI. The first wave, you had, all of the language models and people like talking with ChatGPT. The second wave has been like the software and the agentic AI. The third wave is most likely robotics. So that's the big wave we're going to see here when AI. Data centers make up a big portion of powering these different phases. And then the fourth phase, I believe, is going to be related to a human intervention. So something related like Neuralink or something like that I think it's going to be the fourth evolution of AI. So robotics, like, they're good, still kind of far out a little bit on the revenue. So there's other robotics companies that I would like much better. For example, like if you look at Serve Robotics right now, if you go to downtown LA, I was just there last month or earlier this month, and I'm actually going next week, I believe, for something related to Robinhood that I'm doing with them. And you could see Serve Robotics even, like, do you see the real world usage? Like, they don't have the revenue, but they have a ton of runway, and their market cap is at the same as Richtech Robotics. However, when I went to downtown LA, and some of you guys have been there as well, you can go and order on Uber right now, and you can have this robot deliver your food, and it will go to the store, open up its like vault, the restaurant will put it in, and then they'll drive it to your house. The robot will drive there and it will drop off your food. You see them everywhere. I know, Kevin, you've probably seen them if you're tuned in, Kevin. When we had lunch the other week in LA, we probably could have ordered this guy and it would have taken the food to where we were. Wouldn't have been as good though as that cafe though. But you get what I'm saying? So like, real world usage is going to outbeat hype every single time, because hype is good. It's an indicator to look at, but then it's not good if the real world usage doesn't follow. So you got to verify that. And we see that with Serve Robotics with the same market cap as Richtech. I think they're a better play personally. And Symbotic is another robotic stock. You know, if you look at SYM, Symbotic does all of the back-end warehousing for companies like Walmart even. You know that Walmart and Targets and Albertsons are going to avoid probably going bankrupt from like Amazon or what have you. You know how they're doing it? They're making the Walmart smaller and they're adding bigger warehouse behind, and then they're automating the warehouse with robots, and Symbotic is the company doing it. Symbotic has signed a $500 million deal with Targets, Walmart, Albertsons, and others. And their income statement right now, it's been rocketing actually up over the last few years. You could see their revenue is up to 1.7 billion in 2024. Topping that in 2025, it's up to 500 million a quarter. Revenue's up 25% year over year. And this is a company, Symbotic, that we've been following too. And I like them as a long-term robotics play. You can see that they're really driving innovation in the warehouses with automated inventory and all of the special machinery, but automation for workers to not have to go find the package and bring it to the truck and then ship it off. All that happens with Symbotic. So they're a top robotics company as well. I think they're at $52 a share. Wow, they're at $52 a share is awesome. Because they were just, I remember back here, I was trading them 2023 and they were like 25 a share. I remember. Really cool stuff. So they recently found a support. They're actually selling back down though. And they have a support here around 42, or they can break back above that resistance that they established and maybe make that run back up into 61. But they are at highs as well, but their financials look better than ever. So they're a company to watch closely as well. So we got to go over a lot of different AI companies. We got to start off with BigBear, CTM stock, along with some nice AI plays to be watching right now. I appreciate you all. I hope you guys have a great Friday rest of your day. If you want to tune on in live to our daily live trading sessions, we're there at market open at 6:30 a.m. It's kind of early in the morning. However, if you want to join on in the morning, it's the second link in the description below. You get the targets for the upcoming week, which I think earnings are going to be heating up next week. So we're going to have some targets there like we normally do when the companies are reporting earnings, along with the live sessions and the community of over 24 individuals with a net worth of over $1 million. You're going to be in good hands with stockmates and learning how to invest in tech, AI, quantum, all that good stuff. And I'll even send a free t-shirt over to you anywhere in the world. So if you want to grab that free t-shirt, second link below. If you guys would like to learn more about how to use AI, there's also a full breakdown of this new, innovative, and revolutionary new machine that we've come out with for analyzing stocks with the best models in the world, supercharged with all of the best sources that the models otherwise wouldn't consider. We go out, supercharge these models so you can get advanced analysis from the top models in the world that is premium and better than all the models. If they're doing it on their own, we're supercharging it. And you can get it in the first link in the description for more details. So if you want to check it out, definitely have a look at that live. We did a live recording, and then there's a replay there. You can see what it's like. It's the first link in the description. Appreciate you all, and I'll see you in the next one. If I earned your thumbs up, hit the like button. Do consider subscribing, and I'll see you in the next video. Take care, guys. Isn't that interesting? Next week, it's negative, and then 6 months, it's positive. It's anticipating the market correction. So amazing. Just amazing.